Morning, everyone. It's Wales only. This is the chart set video for the crossover of the 25th, 0000 hours UTC into the 26th of July. And let's just get into it. As always, a little disclaimer: the information displayed in this broadcast is known to cause increased amounts of FOMO. Wales only is by himself and is not responsible for any losses you may accrue for having weak hands. Understand the math. Do not understand anything else because there's like nothing else going on here except math. So there you go. Just remember, it looks okay to be a seller right now, but there's a reason it only goes down but so much. People are always looking to buy Hex, and it's only a moment of time before all the sellers regret the decision unless they had no other choice. Now we'll go into how an economy works. I always like to start with this just to have people mentally prepared for what makes sense and what doesn't, right? An economy, no matter where you are, no matter the level of the economy, whether it's municipal all the way up to global, it operates as a two bucket system. Right? You have the private sector and you have the public sector. The private sector is the value creation nexus of the economy, whereas the public sector is there to facilitate civilization, right? Maintain quality of living standards and all of that fun stuff, right? Picking up the trash, hygiene, health and welfare, all of those basic things that we think about when we're thinking about what civilization is, right? The public sector is supposed to be there to make it happen because that's why they're allowed to take our funds. At least that's the story anyway. But when we look anywhere around the world, right, what we see is that the public sector is bigger than this typical 30%. Because what happens is you get taxed everywhere you go to use your fiat, right? So before you get your income, you get taxed. Company that pays you gets taxed for paying you. You get taxed every time you use or move a dollar or a fiat unit after that, thereafter, right? So what is exactly happening with all the funds that the public sector is taking or being given, however you want to describe it, right? Because it's clearly not going to infrastructure. Nowhere anywhere on the planet. Anytime you look left or right, for the most part, especially in the Western world, um, infrastructure is falling apart, and that's what you should be questioning, right? Because it is your funds, you're the one creating the value, and they're the ones taking, extorting, however you want to define, it, right? But that's actually what's happening. It's not anything to the contrary. This is why we don't see our full paycheck. They take what they want beforehand. And that's pretty much most places on the planet. And that's by design. So it's important people understand how an economy is set up, what it actually does, right? Because there's a reason everything is the way it is. It's not because people voted for this. You got to be out of your mind to think that mass levels of homelessness and mass levels of economic destruction are something that people voted for. I'm pretty sure that's not the case. So we'll keep moving to market cap dominance. Now we enter the HEX charts. This is the top 100, uh, or the percentage value of HEX out of the top 100 versus direct. And this is the 21st of July. Going back, we got 6.1%. Going back to 22nd, we got 5.8%. And the 23rd, we got 5.6. Open. This is as of last night. The date is just wrong, but this is as of last night, the 25th. At around, I think it might have been like 9:30 actually. 5%, 4.8% thereabouts. All right. And again, you have the whole market, right, kind of zooming up at this point in time, and they've only really been able to detract from Hex's dominance to the tune of maybe 1+%, right? I mean, I think the market started reversing after we were after the 22nd, maybe like the 23rd, 24th. So even in all that time, right? Let's give it the 23rd, 24th. And today's the 26th. So even through all this time, right? Hex has really only lost 80 basis points, right? 0.8% in terms of market cap dominance, right? Position out of the top 100. So this is as of last night, courtesy of Nomics, which is the most reliable data source for crypto as of now. And this is what we have going on, right? Just sustainment of value, right? While the rest of the rect just gyrate up and down with no real reasoning as to why. What you end up getting is a volatile market, right? With HEX, it's not that volatile. And as you if you travel through time, you guys will see what that means. If you don't already know what volatility is, volatility is just a variation in prices and whatnot, or the measure of variation in prices. So here we're looking at the first 588 days live between Bitcoin, Ethereum, and HEX in an index form, and this is since their birth, basically, right? So the first day of each respective protocol. And BTC is at 984 in its index, or 985 rounding up, whereas Ethereum finally making a move is at 3,677 rounding down. Whereas Hex, as of last night's crossover, was at 62,132 rounding down. And the T shares are at a whopping 114,737 rounding up. Now, as always, the whole purpose of this system, right, the hex system, is to generate value throughout time, right? Just to be a store of value. And that's pretty important because there's a reason this curve, right, log base 2, depicts the return, the nature of the returns for hex, right? It's very important to understand because the longer you hold on to this productive asset, the higher the value is going to be at the end of your ride, right? Like I got in around here, right? And one thing that's been true since my entry and most other people's entries, even after this point in time, is that if you hold on long enough, the value is going to be higher at the end of it. And that's the whole point of looking at this trend line. This is a power trend line, right? This is, as you guys can see here, this is letting us know the nature of the power values, which in this case is power 2 because it's log base 2. We can see it. Go back to my first videos if you don't understand what I'm talking about, how cryptos work, because this is all math and code. Don't believe anything anybody else tells you because it's a lie, and I've proven it. You can go see the first video, um, just so you can educate yourself. It's all about education. So this is what these protocols are doing in the first 588 days of their existence, right? Hex and T-shirts aren't looking too bad. They look like they're doing what they were designed to do, and that's all we care about from an investment perspective because we're not here for the tech. We're here for the gains. And anybody who likes to throw money away at tech, let them be a VC. That's fine. If you like to make money, then this is probably where you're looking to be because the objective here is to monetize time, right? And I think that any time that you're investing in any asset, that's essentially what you're looking to do, regardless of what the utility of that asset is. You're looking to generate returns on that capital. Pretty straightforward. All right, so now we're looking at the HEX post big payday chart. And big payday was a one-time inflationary event that occurred in HEX, and it occurred on November 19th, 2020. And what you're looking at this portion of the chart is this is basically when I entered around the end of October, and the price ran up into October 1st by 1.5 cents, and then it sold off into big payday, which was around November 19th, and that was an event that essentially pushed out all of the inflation into the system. So it was one big halving essentially, right? Similar to what you would see in Bitcoin every 210,000 blocks. But the difference here is that it was a one-time event. It got all the inflation out of the system in one foul swoop, and all we have now to mimic that same functionality, right? The inflation producing system, because Hex is inflationary, right? In terms of its bond curve design, it is designed to be inflationary. However, the T-share aspect, i.e., the value proposition of the system, is not deflationary, right? And this is important for people to understand because T-shares only exist for 15 years within your custody, right? After that, after those 5,555 days, what happens is that you no longer can have the same quantity of T-shares because they've increased in value over time, as we see in this here chart, right? I mean, it's a 70% difference roundabout between Hex itself and the dollar and the value of a T-share. This is just in return perspective, right? But the delta stays pretty much the same throughout, right? So with that being said, what we've seen is the inflation get absorbed, right, by the market. And now what we're constantly seeing is price consolidating and moving up and to the right. And this is what should be happening in the system that's designed to monetize value, right? And I mean, again, what we're looking at here is how much better HEX is doing versus Bitcoin's before versus each of Bitcoin's respective halvings, right? You got the first one that happened in 2012, the second one in 2016, and the third one most recently in 2020. And HEX is strictly outperforming each and single instance in time by at least a factor of 1x, right? And this is important because this just goes to further prove that HEX is superior even out of the gate. And the longer time we have watching this, right, the further proof we'll have to make that claim. We'll keep it moving. And here we have the T-shares to the dollar cost of a T-share versus the dollar cost of Ethereum, and the dollar cost of a T-share versus the dollar cost of Bitcoin. And as of now, we're still worth more than an ETH at 113, 114% rounding up, and 7% of Bitcoin rounding down. And again, we're just sustaining and maintaining value, right? We're not really gyrating a lot. And that's what you want to see in something that's meant to be a value proposition, right? You don't want to see a lot of volatility. You want to see some sustained value creation and accretion, right? And accretion means that you're building up value over time. And that's what we're seeing here. And this is the same thing that we're seeing from the T-share rate, right? We're looking at the dollar cost of a T-share being at $2,496.59, and the dollar cost of 10,000 hex being at $1,350.77 with 75 cents. What we have to acknowledge is that the system, right, with the yellow line, the T-share rate, this is the metric that maintains the value for the system, right? It's the T-share rate, and that is a function of the dollar cost of the T-shirt divided by the dollar cost of 10,000 hex, and this is where your T-share rate comes from, right? So even though the T-share rate always goes up, it's merely a mathematical function of how the code is designed to sustain that increase rate over time, because the system is designed to sustain its value and improve on its value if and only if the system is being used correctly, right? And this is one of those things that is hard for people to understand. A system has a set of properties. If that system is used in accordance with that set of properties, it will look phenomenal because everything is being done correctly. Now, the cool thing about HEX is that all of the game theory was designed around the functionality, right, of the code, and it just so happens to work out in that fashion because it's all math, right? Logic is math, math is logic to a certain extent, and a lot of the game theory is just really designed around that. And this is why even if the share rate goes up, right? The system is designed in such a way that the APY is separate from the value proposition of the system, and the dollar cost required to attain a T-share is separate, right? Because this is the cool thing. What happens is even if you come in with $1,000, 10,000, 100, right? You're still gonna earn this APY because this APY is a function of the staking percentage of the total circulating supply, not a function of the T-share rate. The T-share rate determines how many T-shares you can acquire and thus earn an even higher yield in crypto form. But you're still going to earn that 40% in crypto form on your fiat, right? So it's like you, even if you're not a whale, for example, you really can't lose because the system is designed to incentivize everyone to participate. And I think it does a good job of that. I mean, the current APY at 38.39% is not something to scoff at, even though we've had elevated levels of APY being greater than 40% over the past week. Right now, it seems kind of like a dud that we're back below 40%. But I mean, where else are you getting 38%? Good luck. This is the payout T-shirt sum line versus the HEX index. And again, what we're seeing here is a value proposition of HEX just focusing or invoking the price to focus on value. So what do I mean? So the payout per T-share sum line, which is this orange line, is the total quantity of HEX paid out by the system to those that have had a T-share since day one. So that number is currently at 2,424 HEX per T-share if you've been staked since day one. That's a lot of HEX. Now, if you look at the return so far, right, the index return, you got 60. The index is reading 62,132. Right now, that's basically 62 divided by 2 is 31 to 1, right? So Now that doesn't mean anything, right? Because we know that hex index is gonna gyrate around the value proposition. But what you have to understand is that the value proposition is this payout per t-shirt sum line, right? And price is always gonna try to tag it, gyrate around it, and keep moving up with it, because that's the whole point of this coin, right? Is to buy it, stake it. Like that's the use case. The use case is to make more money, and this is how you make more money in this coin without having to let price go up and do the job for you, right? But even yet and still, the price is going to follow value because that's how the system is designed, right? And we just went over this with respect to how a t-shirt works and where the value of a t-shirt comes from as far as the rate goes, right? And when we're looking at the cost, the dollar cost of a t-shirt, that's coming from the quantity of hex. Right now, this is more of a leading indicator because when you look at the system, it's 18,319 hex per t-shirt right now, something like that. So this is really a leading indicator. This is what people are paying right now to acquire a T-share, right? Versus the dollar cost of hex at that point in time, right? And what we end up seeing, right, is when we look at this value, this is just a cumulative sum. So what's the percentage value, right? What's the return in percentage terms? Well, here we go. We got 219,777 on an index basis. Now to get the return, we would merely just subtract 100, and that would be 219,677 on a return basis. And this is just for being staked, right? This is what the return number is for this 2,400 hex cumulative sum. This is just for being staked. So this is your return for being staked, minus 100. Something to think about. And here we're looking at the payout per t-shirt index. And again, it's back to normal levels, letting us know 5x, right? Payout per t-shirt from the system. Daily payout index is again at normal levels at 17,215. And I say normal because it's pretty much what it's averaged since we started tracking all this data, right? 17,000, 18,000 around there. The only thing that should continue ratcheting up is the payout per t-shirt sum index because that's merely tracking the cumulative sum of hex paid out in percentage form. But just something for people to gawk at and be like, wow, because this is definitely a phenomenal number, right? And here we got the HEX Payout Metrics. And here we got 5.833 hex per hex. We have 5.833 payout per t-share in hex again, right? We had that the day before yesterday, and I think yesterday we had 5.821 or 812, and then yesterday, sorry, at crossover we had 5.833 again. And then the daily payout in tune with that was a little higher this time, so I'm guessing because we must have had some penalties come out. We got 63.81 million hex in terms of daily payout, and total shares decreased slightly by about 20,000 shares. So that's what makes me think we had some slight penalties. We had a decrease in the total shares and an increase in the daily payout, but still had a sustained payout per T share, which was in line with the day before, which had more shares, right? So it's a division problem basically. And here we have the everybody gets paid chart, payout per T share averages, right? We got the basic average, which is all time at 4.054 hex per T share, and this is all versus last night's crossover price of 13.5 cents. And I think we're a little bit lower than that now, probably like 12.5, maybe a little bit higher. Let's see. Yeah, 12.8 cents. So that's what we're working with right now. And then we have a 28-day payout per t-shirt average of 6.2 hex and a 55-day payout per t-shirt average of 6 hex. Now these lines, given that we probably aren't going to see the kind of crazy emergency end stakes we've been seeing lately, probably going to be flat for a little while. So this chart's going to get a little boring. The average payout per T-share, the yellow line, probably will continue trending up, right? Because this is just a system that continues to build value over time. Because the average should always increase over time. Because all we're doing is adding more value and dividing it by one, right? An additional one. So the fact that we're adding 6, 5 hex every day is going to constantly make this average go up. No choice. But again, this is just another value vision, right? This is just another value point of view to have in regards to X. So now we're going to enter the expiring shares chart. And as always, this is what drives the T-share rate up. all the time is the fact that the expiry shares are front loaded in the system, and that's ultimately what drives the T-shirt rate higher. Because what happens is that when the stake ends, you have the system doing the math for you, which is the difference of when you started your stake versus when you ended it, and it's going to reduce the quantity of shares you can accumulate once again with respect to that duration in time, as well as the return you owned over time. And that's just all in the layman's guide to Hex. So if you haven't read that, please do, and follow up with any questions if need be. But this is starting on the 20th of July, going down to the 22nd. Right, we see that July decreased a little bit versus, or I'm sorry, the month of July decreased a little bit on the 22nd versus the 20th, while the month of August increased a little bit, right? And that's important because, as always, we're going from one month to the next to keep this T-shirt rate pumping, because that's exactly what happens. It's like people taking 30-day stakes and getting paid from it. Now, as we go to the 23rd, what we end up seeing is pretty much more of the same. But we do see a pickup in the later months, which is interesting, because that's like people just moving the stakes forward, right? And did I not change the date? Oh, okay. It looks like I have a extra day in here and I didn't fix the date on, but that's cool. So as of yesterday, we see a decrease in June or July, right? So now we're gonna start to see the decrease in the stakes ending for July, because we have about 5 days left in July, and that's going to start driving up the T-shirt rate a little bit quicker, even further, right? But at the same time, we're going to see the month of August and the month of September pick up in terms of the staking percentage, right? Like if you look at September here, it was lower, right? A little bit higher, a little bit lower. That's it. I don't have any more dates, but you'll just start seeing, right? Here's the 25th again, and it picked up. All of these picked up in the first month, right? And that's what it's all about. It's just about that T-shirt rate always continuously pumping. And this is what we end up seeing every time T-shirt rates expire. And this is why, timing is always of the essence with respect to HEX. Even if it's dumping, right? You want to buy and stake if your objective is to attain T-shares so that you can collect interest. Now here we have the HEX to ETH and HEX to Bitcoin correlation charts as of last night, 25th. And as I always like to highlight, we got HEX on the x-axis for both charts, right? And we got BTC and Ethereum on the y-axis for both charts. Now, what are these charts saying? First thing that they're letting you know is that the correlation is 0 between both, right? That's what R squared is telling us. That's a preponderance of the relative correlation between both. This is 0, right? What's the second thing telling us? Well, we got the returns on the x-axis for HEX and the returns on the y. And what we see now on a plotted basis is the XY plots in terms of returns. And let me just get you guys a little visual, because it always helps. And I should just probably do this standard moving forward. Give me a second, guys. Just going to highlight what this data point is. And as always, this is the hex return in the X slot, right? Because this is the XY plot for each data point. So each data point is letting us know the return for X, which is HEX, and the return for Y, which is Ethereum or Bitcoin, right? At that respective point in time. And this is how we get correlations, because we're tracking things in tandem. How are they performing one versus the other at its specific point in time? Are they similar? Are they dissimilar? Or are they only similar sometimes? And this is what this measure is giving us. And the closer to 0 it is, the less, the more dissimilar they are, right? And it's the same thing we're seeing here. So taking all of that into account, you guys see the HEX returns are primarily on the right side of the 0 axis, whereas the majority of Ethereum, right, and Bitcoin returns are primarily spread all around, right? They're not really picking one side or another. But then if you look a little closer, you do see that a lot of the Ethereum and a lot of the Bitcoin returns are below the 0 line, interestingly enough. So these assets are now starting to look just like speculative assets that you see in legacy markets. And now that's a whole nother conversation. But long story short, the majority of your big returns come from a small number of days, right? But when you're looking at HEX, a lot of your returns come a lot of your days. It's not just a small number, right? And that's what you see when you look at the x-axis, right, versus the y-axis for both of these assets, right? Bitcoin, Ethereum versus HEX. It just almost doesn't even compare. It really doesn't. Um, so now we're looking at the rolling correlations for the dollar cost of a T share versus the dollar cost of X, right? And the 55 correlation, which is the hardest one to keep this strong, is still reading 99.982 percent reading, right? Which is almost perfect correlation, meaning that they're moving in tandem. So if the dollar cost of a T share goes down, odds are that the dollar cost of Hex will go down, and vice versa. Um, if it goes up, it'll go up, right? But sometimes they move separate of each other, right? And a lot of the times it'll be the T share leading the charge because the T share is a leading indicator here, right? The T shares will always go up ahead of Hex. They will always diverge, and in fact, they do quite frequently, and they're much harder to see now because there's so much data on the charts. But you can see it over time. In fact, all of this here is exactly that, right? This is why the correlation wasn't perfect at this point in time because there were divergences between hex price and hex value, which is the T share, right? The T share value in dollar terms, because we have to use fiat, right, to enter the hex system. So we have to price things in fiat terms in order to understand if there's value there or if there's not, because that's what we understand to be value until further notice. So in essence, as long as this correlation stays strictly positive, like it's been for, I don't know, the past 90 days, what's going to continually happen is what we've been seeing, right? Just value building, pump, value building, pump, value building, pump, value building, pump, value building, and then a pump, right? This is what we always see. And when you look at a big chart for hex, that's what you also see. And again, we're not seeing anything different here. This is the dollar term chart for hex, and what we have here is the price of hex on plus the payout per T share in dollar terms for hex, which is the pink line. Plus, and what we also have here is the sum of both, which is the hex, the dollar cost of hex, plus the payout per T share with respect to the crossovers payout per T share at 5.833 for this point in time, which gives us again an adjusted hex price of 92 cents versus a payout per T-shirt price of 79 cents and a hex cost of 13.5 cents. Now, as always, guys, we're gonna definitely run up to 30 to 50 cents because that's what these leading indicators let us know, right? Across time, the system is building value. This is what all this is, and it's not stopping, right? It's always building value. That's what these yellow and pink lines are letting us know, right? And the further we try to diverge from the system, right, the harder we snap back, right? It's only a matter of time before we snap back because we always do. And that's the important thing to understand about the hex system, right? It's a value building system. All of this is value being built, right? All of it. And there's a lag, right? There's always going to be a lag when something is building value because people have to understand it, they have to foresee it, and it takes time. And here's another view, right? We got the HEX price earnings ratio at a abysmal 17.14%. And this is just letting you know how quickly you can attain your capital back within 1 year, right? So it's 17.14% is how quickly you can attain your capital. So you can attain your capital back within 17% of a year versus 551% or 5 years for the all-time low of the S&P 500's price to earning ratio, which occurred all the way back in World War One. So 17% of 1 year or 5.5 years at an all-time low or 35 years. You choose, right? I mean, this is where they're like 38, but whatever. You get the point. And this is where we are in terms of price, right? And the big picture and where we're going and whatnot. So it's important to keep that in mind because, every market functions as a network or as a function of the humans interacting with it, which in result becomes a network effect, which is what we ultimately see throughout time, right? And if you're not familiar with these concepts, please go check out my first 2 to 3 videos. They go into very refined detail on these topics and how markets move, how markets work, and how markets function. And here we have the ROI and how it's generated for HEX. All right, coins and what it is a function of the coin staked as a percentage of the total circulating supply, right? So right now, if we go to graphx.rocks, give me a second, just to give a. Alright. We go to graphx.rocks. What we see is what the hell was I even talking about? Right, the staking percentage. Got 9.559% staked versus an APY of 38.36, right? 9.559 is right in between 10 and 9, and we're at 38%, right, which is about the half of 37.41, right? You got 38 plus. I think it was what it was. Yeah, 38.36, right? So you're right at the lower bound. And the system, how does the system pay out its hex on a daily basis? Well, this is how it does it. The system is designed to generate 3.69% inflation, right, on an annual basis. So if 100% of the system is staked, well, that's what it's going to generate, right? Because that's what it's designed to do. And that's at a max capacity. But if nobody is staked, then all of that interest is going to be multiplied as a factor of the circulating supply because the system is designed for this to be the minimum or the maximum, depending on how you want to view it, right? The minimum yield payout for the maximum number of stakers, right? Or the maximum yield for the minimum number of stakers, right? And that's what's going on. Right now, we're like 10% into the quantity of the potential stakers that we could see at 9%, right? 9%, 9.5%. So we're only getting about 38, 39, 40%, right? So the more adopted the system becomes, i.e., the more people stake, and maybe they won't. Who knows? Maybe they just want the price appreciation, but it's important to know, right, how this works. The higher the staking percentage in the system, the lower the APY the system is going to pay out. So it's not a function of price or anything like that. And that's pretty much all I got, guys. You guys let me know if you got any questions or anything like that. If you're new to Hex and you don't have the Staker app, go type in income.watch into your browser. That's going to get you the Staker app pulled up on your phone from your store. And of course, I would get a referral for using that link. So use it if you want. You don't have to. You could also type in Staker app into your what is it called, App Store, right? And if you are new, subscribe. Check out the old videos that I have posted here. Educate yourself. There's a lot of good content on my channel. And it's all about how markets work and stuff like that, and cryptos and stuff like that. So yeah, youtube.com/Wells Only. You can hit me up on Telegram, t.me/Wells Only, and on Twitter at twitter.com Wells Only with the number 1 at the end. Thanks guys for tuning in. And we'll be in touch as always. Have a good one, guys.